Welcome to TheoTrade in the evening video here for September 19th, 2016. This is Don Kaufman. I'm going to pick up on this Monday afternoon here. We've got just about 7 minutes to go to the closing bell with the S&P futures massively unchanged, but a few things that I want to point out. So during the weekend update, I talked about very specific, very definitive levels. Obviously, those levels being 21.53 in the S&P futures. Okay, then we come down to 21.29. Again, this is specific to the S&P futures. We look down, of course, at the 2112 and then 2100 on the button. So I talked about yesterday and again during the weekend update in extent how the market in many of the recent trading sessions has migrated directly back to these levels, and today obviously being no different. But today gave us some wonderful intraday kind of signals on that sell side activity, and I'm actually going to display some of those to you here. For those of you that trade intraday, fantastic. Okay, for those of you that don't worry about it. We're also going to cover a little bit of what's coming and what you should expect the rest of this week. So if you take a look at the S&P futures, and again, we're just going to zoom into some of this morning's trade. We're strong pretty much out of the gate. We actually rally all the way to 46 and change over here. Started to fade ever so slightly and backed off to about 21.41. Now, at right around 8 o'clock, and that's 8 o'clock again Pacific time, that's 10 a.m. Central time, we saw something that really triggered us to believe that there was going to be some sell-side activity kind of in play as the day progressed, and that happened to be none other than the VVIX. So I want you to take a look at the VVIX, because you guys know I bring it up all the time, but this VVIX was, again, excellent signal inside of today's trade. They were bidding up volatility like mad traders out there today, but pretty much from 8 a.m., again, that's 10 a.m. Central on, they started bidding up volatility in a pretty harsh manner over here, to the point into which the VVIX is going to end up on the day massively unchanged, and so are the S&P futures. Nevertheless, there was a big buyer coming in and gobbling up volatility early in today's trading session, which really opened up the door to a reversal as the day kind of progressed. And of course, when the S&Ps are up in the morning, we're always looking for reversals. Now, what also helped us extensively today is the sell-side activity inside of Apple. Nothing less than monumental volume seen in Apple over the last couple of days. Just got to bring this up on the screen. Today, the stock traded 43 million shares, but that's been nothing in comparison to what it did in some of the other recent trading days over here, hitting when I say phenomenal records, again, you just have to look at this. Behold, over 100 million shares in one day in some of the recent volume, but the volume kind of diving off over there. So the reason I mention Apple is, for those of you that do kind of follow some of our trades, we actually put a spread on Apple. That spread has already gone pretty deep in the money. All right, it's not a huge position by any stretch of the imagination. Nevertheless, still up about 34% on it in just, again, a few days. If you'd like to see the execution of the trade, again, I try to share everything over here, but the execution of the trade, it was on what, September 16th. So I'm looking to exit that trade in just the next day or two. Normally we hold these in-out spreads till you make 55%. However, Apple, it's an immediate sell-off in there, providing some decent upside opportunity. You know, we're going to take the chance and bail out of it. Speaking of bailing out of trades, for those of you, again, that do follow some of our positions here at TheoTrade, I've actually got a Bank of America position on. Now, the Bank of America position, I've actually myself got a number of positions on, but the one specific, the one that I've shared, was another in-out spread. And with this particular spread, it was a bearish spread of 16.5, 15.5, okay, put spread out there. Now, the position, well, it's doing well. Again, I've got a number of different positions on here, but the position that we're actually referencing happens to be in the SEP 30th. It's up about 40%, okay? I strongly suggest, even though that this position has, okay, upwards of 11 days left, exiting at least half the position profitably. Again, normally we look for that 55% for, that's when we kind of pull the ripcord and get out of the trade. However, you do realize what we're facing here inside of, this week. The Bank of Japan, it'll be out. You've got the FOMC. You take a look at the volatility in the next 4 days inside of Bank of America, and it's pretty inspiring to want to bail the position. That's 37% vol. That's a 52-cent expected move in a $15 product. It's starting to get a little bit serious out there. Now, on that note, so covered a little bit about Bank of America. I'm looking to pull the ripcord and bail out of at least half that trade. I don't want to change a trade that's, 40, 50% profitability to the possibility of not making anything, right? So again, pull the ripcord, pull out of at least half of that particular position. There's nothing wrong. Take off half now, half later. On the same note, something really kind of caught my attention over here. And again, we started, talking about levels and so forth and looking at these different levels. Well, one of the things that first caught my attention was the fact, once again, that the S&P futures came right back down today to this, again, 2129 level, right? Pretty much where we expected it to if the markets were to back off. Hit it pretty much on a T, rallied from there. We're kind of meandering right and around this zone of this, again, 2129 level. So in the coming, day, what do you expect out of the markets? Not a huge amount, given the fact that the markets at this point, they're on a little bit of a holding pattern, if you will, waiting for the Bank of Japan. How about that, huh? The Bank of Japan is going to really kind of trump what the FOMC is likely to do on Wednesday. Nevertheless, look for us to kind of meander right in this 2129 all the way down to that 2112. I would seriously consider the 2112 level as well. Now, the one thing that really caught my attention and should catch yours too, if you take a look at the bond market, forget about looking at a chart on bonds. Charts, not going to help you in this particular case, because one thing that really kind of catches my attention, if you look at the 4-day options inside of the TLT, 4-day options in the TLT, they're up to about an 18% implied volatility. You're like, oh, yeah, well, so what? It's an 18% vol. What does that mean? It's not what it means, okay? So I looked over here at the TLT. There's the closing bell. S&P's got a little soft, coming right back to 2129. So the TLT, all right, expands in volatility to 18%. Then just do yourself a favor, go over and look at the spiders. The spiders, which is the S&P 500, they're only at 16%. So once again, we're in this highly irregular situation where you have bond, okay, not only are bonds in play, but the risk in bonds right now is being denoted to be larger than the S&P 500. So if people are looking for volatility, look no further than a product like the TLT, which is going to have residual effects to the financials, big residual effects to the financials. So looking at that, where do you want to position yourself? I'll tell you right now, Bank of America, 37% implied volatility. JP Morgan, this thing is a behemoth. It can't get out of its own way, right? But the volatilities, okay, of many of your financial products right now, and again, JP Morgan, 24 vol, they are jacked up, and you should really consider that, given the fact, again, with the if you've got risk and your risk happens to be towards bonds or the financials, get ready. We're about to make a pretty drastic move, which on a side note over here, the XLF, if you looked at the XLF today and you're completely and utterly confused, the XLF did a spin-off. And what a spin-off happens to be, and this has been planned for quite some time, 3 months ago, they actually were talking about this and planning, the spin-off took the REITs out of the XLF. So the XLF dropped in price. Okay, the XLF was trading right around the 24 level. It dropped to the 19 level. And they're actually spinning shares off to REITs. And the new shares are called XLRE. And in fact, it's even a new sector inside of the S&P 500. So the S&P 500 is no longer just going to have 10 sectors. It's going to have 11 sectors now in it. Again, the implied volatilities are really just confusing right now inside of the XLF. All right, for the next couple of days, again, what these options mean is it has spun off. Literally, if you own the XLF, they're going to then give you some shares, okay, of the XLRE for those on record during this particular event. Nevertheless, over the next couple of days, until the implied volatilities get cleaned up here in the XLF, I'll be looking towards products like Bank of America, like Citi, okay, just to get a better feel of overall risk inside of the financial markets. With that, again, recognize over the next few days, we're moving into this binary event. And all that means is there's not a tremendous amount of predictability about what comes out of the Bank of Japan. Okay, it's not even important what they say. It's important how the market reacts, how order flow plays out. Okay, so there's no real reason to sit yourself in front of a TV and start to ponder the thoughts of the Bank of Japan or ponder the thoughts of a Janet Yellen. What's going on inside of the FOMC meeting? To me, who cares? It simply does not matter. It's a binary event. It's a coin toss. Even if you knew what went on in that meeting, you still couldn't create a trade off of it. Nevertheless, we're about to see and embark on a little bit of volatility throughout the rest of this week. So, stay tuned. Put your helmet on because we are about to be going in. Again, my best indications at this point, look after the FOMC announcement, okay, and look after the Bank of Japan announcement. Explode up, followed by volatility, and the markets coming down. Again, look for markets to rally hard off of some of this news, okay, then come off hard and fast. It's going to be, again, a little bit of whipsaw action that I would expect into both the Bank of Japan and FOMC meeting. Thanks, everybody, for joining us here at TheoTrade. Have a great night. Bye-bye.